CoreWeave is riding the AI wave. It's a data center company that originally was a Bitcoin miner. They would mine for Bitcoin, and they switched their capacity from mining for Bitcoin over to becoming a hyperscaler for AI. Can't blame them. That's where the action's at. Now, this business is trying to compete against Amazon, Google, Amazon, Microsoft, and others that are also hyperscalers. The market cap for them is a little under 66 billion with revenues of 3.5. They are growing, but I'm going to show you their margins and spell out where I have concerns. Analysts believe that it's fairly priced. It's really the stock price, it's really gone places. It really had a strong rally earlier this year. It's had a big sell-off, rally, and we'll see where it goes from here. The revenues are growing because their capacity is being sold. Now, when we look at their capacity, keep in mind, they're putting intense amounts of capital into their production to put those GPUs in play, and they have no free cash flow. They're actually burning cash at a very alarming rate. $8 billion of cash was burned in the trailing 12 months. I'm not the only analyst that's saying this stock's priced really high. There's an analyst out there with a price target of 32 and a high being 200. So there is a big disagreement in the analyst community on what that stock should be priced at. They're going to grow fast. Don't doubt that. But what I do doubt is their ability to produce cash flow. When I value CoreWeave, I determine that the stock price is 56% too high. I think each share is worth $55.69 when I measure the value based on future free cash flows and future earnings per share. Yet the market's selling stock for $127 a share. So there's a 56% difference between intrinsic value and the stock price. So CoreWeave, I think, is going to end with a trail of tears, I suspect. And we'll see. We'll see how quickly or maybe how many years it's going to take for the market to really mature around hyperscalers. If the AI build out has a pause, I think that's going to be really worrisome for CoreWeave. And I'd rather invest into the hyperscalers by buying into these really well-run businesses that have great capital diversification, like Google Alphabet, Microsoft, Amazon. Those do the same thing that CoreWeave is doing, yet they have businesses that can withstand any kind of pullback or pause in the demand for data center services.